Alright, I'm going to go over a trend review of the market bottom chart. The chart that I'm sharing is the YM 5 minute. So I'm just going to go over what happened. So again, I'll just start off from right here. Alright, so the market rallied, and it rallied for 110 minutes on 2200. Okay, actually, I think it's 22,000 contracts. It's actually 22,800 contracts. Pulled back on 1100 and then rallied on 1500. Now look at this. Obviously, the market is in overbought position here. Right? You have a wave that's going straight up, and then it pulls back, and then it rallies. When it rallies, the price, the volume on the higher high goes from over here 228 to 15. Now, actually, it's 22,800, but I don't want to see all the zeros, so I removed them. But anyway, the point here, you have 228 and 15. Like, do you see the problem? That's the problem. You go from 228 to 15. That is a drastic reduction in volume. What it means is traders are not willing to buy at higher prices because it's high enough, and that the prior up wave has exhausted price action. All right, the bulls are exhausted here. So this right here is known as a short shortening of the thrust, SOT. All right, shortening of the upward thrust. In Wyckoff terminology, what that means is the market has lost momentum. Which what that means is that buyers are not willing to buy with the same amount of enthusiasm as they were buying before. So over here you have a shortening of the upward thrust as seen in the price and volume action, followed by a reversal of 40 minutes, 4500 down. Right there, this is telling you that the market has gone from bullish to bearish. Alright, so, and if you're long, you got to exit the long because you have that signal to exit the long. Why? Because there it has been a turning point. Okay, the exact turning point is right here, but there's one over here which I'll explain as well that demarcates distribution into markdown. Okay, so basically over here you have the shortening of the upward thrust, or SOT, which is the turning point, and the market goes from being very bullish to being exhausted up here, and sellers take over because these buying waves, they go only so long as they can quote unquote attract the following. Also, the buying waves can only go up, and they usually turn after they get exhausted. All right, that's when the sellers come in, and because they're waiting, the sellers are waiting for the buyers to be exhausted, and this is an indication that they're exhausted. Okay, that's why the volume and the higher high is weak. So sellers come in, they do their damage. You should get out long and get ready to go short. Turning point occurs here. It goes down, and then what happens is the bulls rally, but you know this type of maneuver here is meant to get the stops. You know, a lot of folks will go short here and put their stops right above the prior pivot, or right above the pivot. This type of move here is, I guess you could call it an upthrust. if you want, because they up thrusted this area, or a shakeout. But whether it fits any of those technical indications uh, exactly is questionable. But the the reasoning here is that this maneuver here is meant to take you out. Okay, because that's why it goes right above this area and quickly reverses. All right, the whole idea here is because there's stops above here and here. Not everybody's going to put their stop above the high. They'll put their stop above the prior pivots. Okay, so that's why this type of maneuver here, where they move a little bit sideways and they rally, price rallies until it hinges, is used to take these guys out. All right, so over here there is some strength, but don't be fooled. Just wait for the pullback and you see that strength just evaporated. All right, you have sellers in control. You have a buying attempt, 25 minutes and 2800, reversed on 35 minutes and 3500. What does that tell you? That tells you that the buying wave has just been taken out with more time and volume. Right? So, and more ease of movement. You see the bars in there. Distribution here. The hinge, which is right in there. Identifying an end to the distribution phase. So this is all of that is going on here. Okay. But basically you could tell by the volume right here that sellers took control again. And then the next turning point is right here when it rallies. And again, don't be fooled. This bar looks like a big bar, but that's the thing. If you're watching price action, you see a big bar like this, oh, maybe I should go long. But no, don't. You see the bar is one bar, has no follow through, and the volume then is 1300. All right, so you see it goes from 2800, 1300, 35. Now watch the interplay between the volumes and the rallies, because it's really important to be able to read this. First, what's the volume here? 2800. This volume, what's the volume here? 1300. The ratio here is less than half. Alright. Now look at the down volume. So we already established that the volume has evaporated by 50% on the up waves. The volume has evaporated or reduced by 50%. Now take a look at the down volume. We notice two things. The down volume relative to the prior up volume is greater. Not significantly greater, but greater nonetheless. Down volume is greater than the up volume, and its pullback is less than half. Almost one-third. Almost one-third of the volume of this down rally, its pullback is definitely less than half and almost one-third. So the indications are clear. The up volume has been reduced by 50%, whereas the down volume is not only greater than the up volume, but it's also almost 3 times greater than the pullback. Okay. Finally, you will also notice that the up volume has increased from the down volume has increased from the prior down volume. This 28. You go from 28 to 35. Down volume has increased. You go from 28 to 35. The down volume is bigger. You go from 35 to 13. The down volume is almost 3 times greater. All of these indications here are relevant to the tape reader because they are clearly stating that the sellers or the bears or supply is stronger than demand. And this was really the nail in the coffin, the 13 over here, which basically said that there's no volume up here, and that the rally now the rally is weak. Okay, but all of this, all initiated, it talks about this turning point right here, but you will get a similar indication here because you have 15 up, you have 228, which evaporates to 15, and actually this volume is greater. I don't know why this fucking thing, volume at price. Yeah, bullshit. Anyway, so it's actually greater here. I have a setting that's messing things up, but the down volume on this pullback is actually greater than the rally volume here, and this 45 is also greater. So I mean the selling volume is greater. After the buyers get exhausted, the selling volume relative to the buying volume is greater, and that really sets up the turning point. So you see the turning points here and here, but in order to understand them, it requires an understanding of the background that the demand is exhausted, along with the up and down rally and the confirmation, etc., etc. So that really set up the two turning points. One here, the SOT, and two, this, I think Wyckoff probably called this the feather's weight, where he talked about, he described it as the feather's weight. And later on, it was described as, I think, the LPSY by other folks. But the point is that is nothing more. These both are nothing more than turning points. Turning points. Alright? The whole point of the wave chart, or at least one of the functions of the wave chart, is to build an intuitive understanding on how to call the turning points. Alright, that is a skill, then the wave chart is the tool. And again, the market breaks, and then when it, over here, we went from strength to weakness, right over here, turning point, and then when it broke, again, this is a turning point. This SOT was a turning point, and here you have another turning point. Now it's very hard to trade this because the market just broke. So it's very hard to get in here in this turning point. Very, very difficult. But at least it exit your short position if you're short, and look for a long position. Why? Because the market right here, at this point right here, the market goes from weakness to strength. From weakness to strength. And the reason why it does that is because it sets up the counter trend rally to test this area. The counter trend rally to test the breakdown. Okay, it's just a break and a retest of ice. But again, that trade is a counter trend, right? So the turning point for going long was actually identified here to go higher. And this space over here is because the market closed and then reopened, I don't know, later on, right? So that's the idea. The idea is to be able to identify turning points using price volume activity and understand that that's a function of the wave chart, and and, and to understand what Wyckoff tried to explain. And you see, this is totally 100% different from the shit that people are looking at on the internet, which has nothing to do with Wyckoff and what he was trying to get across. It is it is really like mutated into into something else. This right here is what he was trying to get across, and this right here is um, part of his wave chart and what it's used for. All right, bye.